Sarah Morgenthau, President and CEO of I Have a Dream Foundation, and you're watching Taking Stock.
Two minutes to go here until the closing bell at the iconic New York Stock Exchange, and the major market indexes are in mixed territory at this hour. A little bit of profit taking for the S&P 500 as well as for the small caps, but how about a fresh round of all-time highs for the Dow, pushing once again that much further past 50K. Got to start working on those 51K hats now here. They're coming here soon. And the New York Stock Exchange Composite Index in positive territory at this hour, up 0.2%. Utilities, real estate, materials, those are your strongest sectors in the S&P 500 at this hour into the closing auction. A little bit of risk-off rotation away from big tech, financials, and healthcare. Those are the hardest hit sectors on this Trading Tuesday. Welcome to the broadcast, one and all. You are watching Taking Stock, and I'm your host today, JD Durkin, moments away from the ringing of the iconic closing bell right here at the big board. The man himself, the Einstein of Wall Street, Peter Tuchman, is on deck. He will join us right after the bell, and he's got his Dow 50,000 hat. You might as well. We'll keep the party rolling. Yields falling across the board. The 10-year Treasury yield reaching its lowest level going back to January 15th. Right now settling in down about 6 basis points on the day to 4.14. The Mag 7 tech stocks are also in mixed territory. The outperformer out of the 7 names include Tesla, which is up 1.5%. Shares of Alphabet down 1.5%. We got the team from Afrinol. This is ticker symbol APH here at the NYSE, set to do the honors. We'll bring back our market coverage and talk with the man himself, Einstein of Wall Street, right after the closing bell. That's how you ring the closing bell, by the way. Swing that gavel with some authority to bring about a close to the auction on the day. Your final tail of the tape on this Tuesday, February 10th. The S&P 500 down, let's call it 0.3%. The Dow pushing once again into positive territory for a fresh all-time high, as is the New York Stock Exchange Composite Index. The small caps down 0.3%. Also catching a bid on this Trading Tuesday, the home builders led by D.R. Horton, industrials led by Dow Component Honeywell, and how about the streaming giants? A very strong day for Disney as well as Spotify. We'll talk a lot more about Spotify shares coming up and their huge day here on the street in just a bit. Let's bring in the man himself, Peter Tuchman, senior floor trader at TradeMoss, the institution inside this institution of the New York Stock Exchange. My man, still rocking the Dow 50,000 hat. We had it on Friday. And 2 days of gains since then. What are you seeing in the markets?
We have to be respectful of these numbers. These are milestones. These are landmark numbers. They're not just numbers. I know there's some of the haters who just say, what's the Dow? It's 30 stocks. It's not that significant, right? Look, we actually came within inches of an S&P record today as well. And that 7,000, that number that's been tickling us for a while. I think it's really impressive, though. We always talk about rotation. Right, we all know that, yes, the Dow is 30 stocks, but those stocks are incredibly significant as the industrial average. And look, they're also not just that. We have Apple. There are a number of other tech names that are embedded in the Dow. Yeah. And so I think it's impressive that we've been able to get to this landmark number and hold it. Right, ever since we hit it and broke through and we closed above it, that's the only time we're allowed to bring out the hat. Right. We've hit record highs 3 days in a row since then. Yeah. And look, I mean, the market is amazing. We're seeing a really nice volume, robust volume in February. We're 7 days into February, and we're averaging about 300 million shares more per day than normal, right? So for me, that shows that there's the buying is a buying of intent. Right, we're seeing that. We've had 1.5 billion on the tape almost every single day. And so advances versus declines, even on down days, has been actually in favor of the advancers. To me, that means that people are just buying with intent. They're getting out of some of their underperformers and getting into things with some value, or they're outperformers, right? They're taking some profits in stock. Look, there is uncertainty, no question about that, in the market. There's a lot of things going on. I had a nice chat with Dan Ives yesterday about it. I was trying to understand why the tech sector, software, chips and stuff like that had been under so much pressure. And he said basically investors are a little bit impatient. with all the promises that have been given about the data centers and about tech and Mag 7 and all those promises by all those huge names of all that capex expenditure that has been put into the market. The bottom line is feelings are not facts. People are, impatience doesn't mean that the companies are going to change their position, right? If nothing significant has changed in a company's posture, then you just hold the line, and that's what they're doing. They know maybe it will take a little bit longer, maybe their shareholders are a little bit impatient, but at the end of the day, the demand for data centers, chips, and all that is still there.
Yeah, you mentioned advanced declines. For every 1.4 stocks up, only one stock down. So breadth for the tape today, leaning pretty decisively, maybe
And
not
it's
decisively
been,
positive,
no,
but,
but it's been,
positive
it's
in
been
a
that
pretty
way.
healthy way.
Correct.
What does that tell you? That you got the S&P equal weight doing as well as it is? You got the Dow, which is led by financials and a few other key industrial names, and tech maybe somewhat, at least for now, taking a little bit of a breather.
It's, but there's nothing wrong with that. If we look at every pullback and consolidation that we've seen over time, you and I have gone on from February, March, and April of 25 to November of 25 to the last couple of weeks where we've seen pullbacks in the Mag 7 and tech names, those are buying opportunities. If nothing significant has changed in the picture, except perhaps a little bit of a postponement about the finality of building those data centers and all that and trying to find their footing again, these are buying opportunities. The history has shown us that every single time. And retail is smart money, and that's at the end of the day, that's all good.
Absolutely. I got about 30 seconds left. What else are you paying attention for? Big catalysts, things with the Fed that you'll be paying attention to, you think we should also watch?
I think we're still watching. Look, we're still watching a lot of things. We got a bit of a rug pull coming out of the White House the other day, and we're not really clear about the direction, about what the new Fed chairman is going to do. Right? We know that he's a lot more hawkish than he is dovish, but we do know that he's probably going to do what Mr. Trump wants him to do. So there's a lot more that we need to understand about that story.
Yeah, of course.
And so I'm going to be keeping my eyes on the Fed. You're going to keep your eyes on whatever trajectory. The economic data that we're slowly getting those are the unknowns.
Yep.
And the unknowns are what keeps that market on its toes.
It certainly
and
is.
so as soon as we get a hold on that, we're always one tweet away from crazy town.
That's
Just
it.
remember that.
That's what I've heard
and
you
we've
say many
seen that,
times.
right? And so you know what? We're in a better place than we were a couple of weeks ago.
Keeps things exciting for
You
you
know,
and me
it's
down
always
here. Peter Tuchman,
exciting.
thank you for
Dow
joining us.
50,000,
The
it's a
great
beautiful
Dow
day.
himself. Jeremy, you'll grab your mic. Thank you for joining us. Todd, we'll head this way. And we'll quickly break down Coca-Cola earnings, down 2% or so on the day after reporting a beat on earnings, but a weaker than expected revenue number, missing those top line projections for the first time in 5 years. Coca-Cola, like every other major brand facing consumers, they are facing somewhat of a stretched consumer, being a bit more picky and choosy on their discretionary spending. This was the final earnings call for outgoing CEO James Quincy, COO Henrique Braun, set to take over KO on March 31st. Shares are up 9% on the year. Todd, how about a look at two quick NYSE notables? We'll start with Spotify. Hello, up almost 15% on the day, seeing strong user growth in Q4, a 13% revenue bump year over year. Even though the stock is down about 30% over the last 52 weeks, analysts are pointing to the potential for recovery due to recent price hikes on Spotify users for premium subscriptions. Also got a few upgrades as of late, from neutral to buy from analysts at Goldman Sachs. And finally, how about Home Depot here? It is the fourth most weighted name in the Dow, up more than 2% on the day. Had a nice run up so far here year to date, up about 13%. Has not received an analyst upgrade since May of last year, but the average one-year price target is at $400 a share, upside potential off these levels of about another 3%. All right, yesterday, FinTech TV's lead anchor, their very own Remy Blair, caught up with Polygon CEO Mark Byron to talk all about the firm's open money stack. Take a look.
Polygon Labs is betting that the future of blockchain isn't just code and is rebooting as a regulated U.S. payments platform. Now, the pivot to the so-called open money stack does signal a shift. Polygon is no longer just building the plumbing for digital assets, that is now going head-to-head with these settlement rails, traditionally dominated by global payments processors. Well, joining me this morning is Mark Boyron, CEO of Polygon Labs. Mark, good morning. Thank you so much for joining us. Well, Polygon is moving into regulated payments, so tell us why this is the right business play now.
Yeah, thanks for having me. So I think this is really important for blockchains to recognize in general is that when you think about a blockchain, it's really just another database. And database themselves are completely commoditized. what you want to do is actually create some value on top of that. And from our perspective, when we look at it and we see a blockchain, we don't see a blockchain that necessarily is great for payments when we look at a blockchain in general. Instead, what you actually want to do is you want to create value on top of that. You want to create services that are going to make it useful to actually move money. So from our perspective, when we look at whether it's stable coins or tokenized deposits, what we want is we want the ability to not just move it on a blockchain easily, but also on ramp it easily, off ramp it easily, hold it in a wallet easily, earn off of it easily. All of these things end up being really important. And that's core to like the change that we're making at Polygon.
Yeah, and Mark, as you mentioned, for years you've been working on the plumbing side for other people's apps, and now you're spending to buy the cash machines as well as the digital wallets. So, for our viewers, can you walk us through what it means to get into the regulated US payment space in 2026 and what that looks like beyond this year?
Yeah, sure. So I think one of the big things with our acquisition of Coinme is that we also acquired licenses that allow us to do business in 48 different states. And the important thing here is that we are able to provide services that are very unique for a blockchain to provide. Usually, when you think of a blockchain, you're very limited in what you can do because you're not regulated. And so, when it comes to actually taking, fiat, whether that's physical or digital, and actually moving that onto the chain, which is where people want, you're limited in doing it. And usually you're doing integrations that don't actually get very deeply integrated into the chain. With our acquisition of CoinMe, now we have the flexibility to two really important things. One is bringing that digital money on chain, but also bring that physical money on chain. And in both of those cases, what that means is that, any normal consumer, but also any business now has the ability to say, okay, I have money in a bank and I actually want to transfer it in a better way than currently exists. And rather than needing to rely on like some app or the correspondent banking system, I'm instead going to rely on a blockchain. And with this deep integration, through the click of a button, I can both onboard and send my money anywhere around the world rather than having it limited to certain regions or locales that are being supported.
Yeah, so let's take a look at the competition. Does this pivot that you've made, does it mean you're no longer competing with, say, Solana, but with Wall Street instead? And what is the outlook moving forward? And what about the landscape moving ahead compared to, say, last year?
Yeah, sure. I think from a competitiveness perspective, I think there's zero doubt that there is a new set of competitors that we're dealing with. But most importantly, my view is that stablecoins are going to eat up the existing payment rails that exist, right? And so when we fast forward, 5 years from now, 10 years from now, you're going to be moving, quadrillions of dollars on chain on a yearly basis. And really those existing rails that are being used are very inefficient, both from a cost, opaqueness, and speed perspective. And so, really, the question is, who is being replaced when we move that money on chain? And most importantly, it's not just about like replacing, it's all about working together. Because when you move the money on chain, yes, there are some losers, but those losers have new opportunities. And what we're looking to do is actually partner with those who are going to be seeing the business model change and actually help them bring that money on chain. So while there is a competitive nature to what we're doing, there's actually a lot of collaboration. And I think that's generally true in the payment space in general. And it's one that is going to be a big opportunity for us. So when we look at 2026 and forwards, it's really an opportunity to partner with, existing institutions that exist as well as new players and help them bring money on chains that it can be transferred in a better way than it happens today. And that's going to create massive opportunities both for Polygon and for those existing players.
Well, Mark, we will have to leave it there for today, but always great talking to you. Thank you so much for joining us, and thank you so much for all of your insights as well as perspective.
Thank you for having me.
Welcome back to the show. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. And I got to say, this is absolutely insane because not only is our next guest the managing director at Swan Bitcoin, this man was my college roommate freshman year at Villanova and my teammate on the Villanova men's hockey team, the great John Haar, joins us now. My man, welcome.
Great to be here, John.
This is great, dude. I was thinking about, dude, you call me John. Look at that. It's a real throwback.
We go way back.
We do, dude.
Only I would do that.
Dude, that is absolutely wild. You would. Very few people would call me John, but my freshman year roommate would. Dude, I've known you for over 20 years. You, me, Chuck McConnell, crammed into that tiny shoebox of a dorm at Moriarty on Villanova's campus. And here we are, man. It's great to have you on Taking Stock.
That's a lot of history there. This clip is going to be shared with a lot of Villanova people.
Yeah, a lot
Villanova
of
best for their club hockey team. I'd say basketball is right below that.
Yes, for sure. Basketball, football, those other things down, but the men's club hockey team for sure is definitely what the university is known for. We could talk hockey all day. We do have to talk Bitcoin. What have you seen about Bitcoin's pricing really since the Kevin Warsh nomination now? About 2 Fridays or so.
Yeah, so Bitcoin last 4-ish months, it's obviously down from a high of like 125K down to 60K was the low. I think it's been battling a bunch of small narratives over the last several months that I think are all contributing to price declines. And I think now people are playing this game of, okay, what really caused it to drop, 52% from peak to trough? And I think there's like a long list of things that you could give. To your point, I think a more recent one was that Kevin Warsh has announced the new Fed chair. I think the market as a whole is trying to digest that. What does that mean for equity prices? What does it mean for interest rates, the Fed's balance sheet? Bitcoin is going to be very sensitive to all of those things. As a punchline on Warsh, I would say I think anyone who believes he's going to come in and rock the boat and drastically change Fed policy from what it was going to be is mistaken. I think some people might be reading into his comments from a few years ago a little too much. I don't think Trump is going to appoint someone who's going to come in and just completely change policy. I think we do get some rate cuts this year. And also remember the Fed's balance sheet, they just made a decision to gradually increase it. I don't think Warsh is going to come in and rock the boat in a big way.
Of those many factors working against Bitcoin as of late, what do you find in terms of liquidation, deleveraging? Because it's all well and good on the upside as we got around those October 4th, October 5th highs of 125, 126. But man, if you're stuck holding that bag on the way down, you got a lot of that selling that continues to accelerate.
Yes, for sure. So I think some of those narratives, which I think are largely true, or there's some degree of truth to all of these things, would be long-term holders took some profits above 100K. There's a lot of believers in this 4-year cycle theory of Bitcoin. There's some people who said, hey, maybe quantum computing is a concern for Bitcoin. There's also some people who just said, hey, Bitcoin's supposed to be this rocket ship of an asset. We got into October, November, and it just wasn't what people thought. Other things took the spotlight, AI, robotic stocks, and they said, hey, let me rotate into these other things. Also gold, some people said, hey, why is Bitcoin not tracking gold? So all these little narrative battles that Bitcoin had, which again I think are true, put all that together. And then also some people who bet on a big increase for Bitcoin in a leveraged way. If their bet is wrong, what does leverage do? It makes things happen more quickly, more dramatically. And you see those traders get flushed out, and then the price moves in a big way. So that's what I think the price action was last week mostly, was some sort of forced persistent selling. That's what it felt like to me. And I think we will see someone come out likely in the coming weeks and months to say, oh, look, this fund made a big bet, it didn't play out, and they got forcibly unwound.
Yeah, it's trying to find its footing right now, around 69,000 on support, 70 or on resistance or so. We kind of track it day by day. It's somewhat stabilized here. While I have you, how do you view Bitcoin correlation? People say, well, compare it to the NASDAQ, and they say, no, maybe it's these semiconductor ETFs. How do you view the correlate? What else exists in terms of financial instruments you look to for possible crypto major correlation?
Yeah, so I think Bitcoin is in this unique position where some people think it should be correlated to gold, right? It's the digital gold. Some people think, oh, it's a speculative tech bet, so it should be correlated to the NASDAQ. It should be correlated to IGV and software and SaaS stocks. And I think it's one of those things you ask a certain number of people, you'll probably get that many answers and maybe more. So it is in this weird period where it's an emergent monetary asset, and this is my view now. I think it is ultimately going to be like digital gold, but we're clearly not there yet. The price action of the last few months is good evidence of that. So I think you'll have plenty of people who say, oh, SaaS stocks are going down, Bitcoin should go down with it, and that can be self-reinforcing over a short time period.
Sure. All right, Villanova hockey legend and managing director at Swan Bitcoin, my old roommate, the great John Haar. Dude, come back on the show anytime.
Thank you, JD.
It's really good to have you. Folks, don't go anywhere. Much more Taking Stock coming up right after this. Welcome back to the show. Last week, FinTech TV lead anchor Remy Blair sat down with Rahul Goyal of Gauntlet at the Ondo Summit 2026 right here in New York City. Take a look.
Welcome to FinTech TV. I'm Remy Blair. Gauntlet has long been seen as the quantitative backbone of DeFi. As we kick off the new year, the mission has evolved for the company. Gauntlet is bridging the gap between traditional capital and also decentralized markets. With over $2 billion in TVL across their curated vaults on Morpho, Drift, and Camino, they are helping institutional allocators access sophisticated yield through a simulation-driven lens. Well, joining me here at Ondo Summit 2026 is Rahul Goyal, head of institutional partnerships at Gauntlet. Well, Rahul, great to have you here. Thank you so much for joining me.
Thanks for having me.
Well, Ondo Summit is well underway. So what is different this year compared to last year?
Yeah, so I was here last year as well, and the difference is really night and day. You know, a lot of institutions and fintechs and different crypto companies are now starting to actually execute and, you know, play and launch products and create new products. Whereas before in previous years, it was more exploration, research, kind of getting the knowledge. I think a big part of that has been the regulatory shift to DC. Companies feel a lot more comfortable exploring and doing a lot more. And I think we're going to see a lot more in the coming year as well.
So I do want to dive into what's going on at Gauntlet. I understand Gauntlet currently manages over $2 billion in vault assets. So for viewers who might not be familiar with the difference between prime versus frontier vaults, can you explain this to us?
Yeah, so these are different risk profiles that our vaults have. And I guess just to catch people up in the room, the idea is that users can take their USDC or their stable coins, deposit them into our vaults, and generate a yield from them. The yield is based on people who want to borrow against certain assets. So if you have Bitcoin, we consider that a kind of a prime asset, a prime collateral asset. So you can borrow a Bitcoin at a lower rate than certain other assets. You can also earn at a lower rate than certain other assets. The Frontier Vault is a bit more flexible, lends to a broader group of assets, and generates a higher yield and a higher borrow cost for those assets.
And of course, we hear the term institutional adoption, but I understand that you recently onboarded a NASDAQ-listed company, BTCS. So what would you say is the secret sauce in terms of risk modeling that makes a publicly traded corporation comfortable using decentralized protocols instead of, say, a traditional bank?
Yeah, it's a great question. So BTCS is a great partner of ours. It's a digital asset treasury company, which we work with, primarily focused on the ETH side. We've signed a few of these already. And so, like I said, you know, they're using our vault to generate yield of their US dollar balances, along with a number of other assets. I think it really comes down to kind of a reputation in the market. We've been around since 2018. We've had really no losses in any of our vaults for a very long time. And we have a strong reputation doing risk management, risk assessments, and understanding the downside much better than anyone else.
And while we're here, of course, the focus has been on real world assets as well, both here in the US as well as overseas. So when it comes to strategies for levered RWAs, tell us what this means.
Yeah, for sure. So we launched a levered RWA product, the first of its kind of really ever, about a year ago in partnership with Apollo, Securitize, Morpho, and Polygon. And the fundamental idea is you can take an RWA asset that, say, yields 10%. You can put it up as collateral on a lending market like Morpho, borrow dollars against it, use that to buy more of the underlying asset. This is very similar to back leverage in the traditional finance world, or you can think of it like a carry trade. And the fundamental idea is that the end user gets a higher yield through DeFi than they would get otherwise. And, you know, we help kind of manage and execute the position, monitor the risk around it, lever and delever the positions, et cetera.
And of course, here we are, the beginning of 2026, and we are looking towards the future. So I understand you use agent-based simulations. So walk us through this.
Yeah, for sure. So this is something that we've been working on for a long time, almost since the start of Gauntlet. And so the idea is that, you know, we're constantly simulating and trying to understand, you know, what happens in this moment if the Bitcoin price falls 60%, right? What does that mean? How do the liquidations that are in the DeFi market kind of play out, and kind of constantly simulating these different scenarios and figuring out, you know, what do we think is likely, what do we think is unlikely, so we can make accurate decisions on allocations to deliver the best risk-adjusted yield for the end clients.
Well, Rahul, I appreciate your time. Thank you so much for joining me and sharing your perspective at Ondo Summit 2026.
Thanks for having me.
Thank you.
Welcome back. I am Scarlett Sieber from Money 2020, and this is Jargon Translator, where we break down the finance terms that sound fancy but actually change the game. Today's word, tokenization. No, it's not about arcade tokens, although those are pretty cool and I like my arcade games. It's actually about flipping finance on its head. Imagine owning a piece of a Picasso or a skyscraper instead of the whole thing. That's tokenization. It's the process of turning real-world assets into digital tokens on the blockchain. Why is this the big deal? Because it makes expensive stuff accessible. Instead of needing $10 million for a building, you can buy a fraction for $100. It's like splitting the check at brunch, but for real estate, art, and even stocks. Tokenization also makes trading faster and more transparent. No middlemen, no paperwork, just blockchain receipts, baby. But here's the catch. Regulation hasn't fully caught up. So while the tech is fire, we know that, the legal side is still loading. So next time you hear about tokenization, remember, it's not about arcade tokens. It's about democratizing ownership. That is your jargon translated. Back over to you.
Welcome back to the show. We do not frequently get a must-watch jobs print on a Wednesday morning, but tomorrow we will, in fact, get the delayed January jobs report before the market opens. We'll also get quarterly results from names that include Shopify, McDonald's, Unity, Vertiv, T-Mobile, as well as the team from Kraft Heinz. And this time tomorrow we'll get earnings after the bell from AppLovin as well as Cisco. Thanks for watching today's edition of Taking Stock. Have a fantastic Tuesday night. We'll see you again tomorrow from the big board.